When most people hear the word insurance, their first reaction isn't excitement, it's anxiety. Paperwork, premiums, policies full of fine print, maybe even regret over something they bought without fully understanding, or worse, something they skipped and paid the price for later. Insurance has long been framed as something confusing, intimidating, or even unnecessary until disaster strikes. But this audiobook isn't about fear, it's about clarity. And more than that, it's about control. Insurance, when approached intentionally, is not just a backup plan. It's a proactive tool, a cornerstone of financial protection that allows you to move through life with greater peace and confidence. It's not about planning for doom and gloom. It's about being prepared so that life's unpredictable moments don't undo everything you've worked so hard to build. The goal here isn't to scare you into buying more. It's to help you understand what truly matters and what doesn't. To break down the essentials, remove the overwhelm, and empower you to make smarter, simpler decisions with your money. Whether you're just getting started or reviewing coverage you've had for years, this is about shifting your mindset from avoidance to action, from confusion to confidence. Because when you understand insurance as a part of your financial plan, not an afterthought or a burden, it stops feeling like a chore, and it starts feeling like leadership. Your leadership. Over your life, your choices, and your future. Chapter 1. Understanding Risk. Why insurance exists. Risk is one of those words we hear all the time but rarely stop to examine. We hear it on the news, in conversations about health or finance, or when someone talks about an accident that came out of nowhere. Yet most of us live our daily lives trying to ignore risk. We assume tomorrow will look a lot like today, that the roof will hold, the car will start, the job will still be there, and our health will remain intact. It's not pessimism to say, this isn't always the case, it's realism. And understanding this reality is the first step toward making smarter, more resilient financial choices. At its core, risk is uncertainty. It's the possibility that something will go wrong, and that when it does, there will be a cost, financial, emotional, or both. Risk doesn't discriminate. It's built into every human life, every household, every job, and every investment. You can't avoid all risk, but you can manage it. And that's where insurance comes in, not as an emotional safety blanket, but as a financial strategy. Insurance exists because life doesn't always go according to plan. In fact, it rarely does. Imagine for a moment that you're walking a tightrope. Without insurance, every step you take is done with the knowledge that one slip could lead to financial ruin. With insurance, there's a safety net below. It doesn't prevent you from falling, but it softens the blow. That's what risk transfer means. Instead of carrying the full weight of every potential disaster yourself, you pay a small cost up front called a premium to have a company absorb that burden if and when the worst happens. Let's take a step back to see how this has evolved. Centuries ago, people pooled resources in communities or guilds to protect each other from disaster. If a farmer's barn burned down, the village helped rebuild it. If a sailor's ship sank, his trading partners shared the loss. Today's insurance is built on the same principle, but scaled to millions of people. We pay into a shared pool, and when misfortune strikes, that pool is used to help those who suffer loss. It's not a handout, it's protection that you pre-arrange. Yet for many people, the idea of paying for something they hope never happens feels wasteful. This is where mindset plays a critical role. Insurance is one of the few things we buy hoping we never have to use. But when you do need it, the cost of not having it can be devastating. A medical emergency without health insurance can lead to bankruptcy. A car accident without auto insurance can leave you liable for thousands of dollars in damages. A fire in an uninsured home can wipe out a lifetime of savings. These aren't dramatic hypotheticals, they happen every day. So how do you know what risks to insure against and which ones you can shoulder on your own? That's where financial thinking comes in. Start by looking at two things: the probability of an event and the severity of its impact. If something is likely to happen but won't cost you much, Like your headphones breaking, that's probably a risk you can absorb. But if something is unlikely yet catastrophic, like your house burning down, that's a risk you want to transfer. Insurance is most valuable not for the little inconveniences, but for the big rare events that would otherwise derail your life. Think of it like this. You don't wear a seatbelt because you expect to crash every day. You wear it because if you do crash, the consequences could be fatal. Insurance works the same way. It's not about predicting disaster. It's about protecting your future. Now let's look at where risk shows up in everyday life. If you drive, you risk accidents both from your mistakes and from others. If you rent or own a home, there's the risk of fire, theft, or natural disaster. If you work, there's the risk of illness or injury that prevents you from earning an income. If you have children or people who depend on your income, there's the risk of what happens to them if something happens to you. Risk is everywhere, but so are solutions. Insurance helps you turn unknown chaos into known costs. A predictable monthly premium is far easier to plan for than an unpredictable $100,000 hospital bill. And while some people believe they can self-insure by saving up, the truth is that most of us can't save fast enough to cover a major loss. Even if you're good with money, one lawsuit or diagnosis can undo years of progress. Insurance, then, is a financial tool, not a luxury, not a tax, but a strategy to protect what you've worked so hard to build. But there's another reason why insurance matters: peace of mind. Not in the vague emotional sense, but in the real strategic one. When you're not constantly afraid of what could go wrong, you make better decisions. You can take calculated risks, invest more confidently, and move through life with clarity. A well-insured person doesn't fear the future, they prepare for it. That said, insurance is not about buying every policy out there just to feel safe. In fact, too much insurance can waste your money and weaken your financial position. That's why understanding the role of risk, and which risks truly matter, is essential. You want to insure against the things that could devastate you, not the things that would just inconvenience you. For example, extended warranties on electronics often cost more than the risk they protect against. But liability coverage on your auto or home policy protects you if you accidentally injure someone or damage their property, which could lead to legal and financial consequences you can't afford. The key is knowing the difference between nuisance risk and serious risk. Insurance isn't about avoiding every bump in the road. It's about making sure the bumps don't throw you off course completely. Finally, there's a deeper principle here. When you insure wisely, you're not just protecting money. You're protecting your momentum. Without insurance, a single accident or emergency can halt your financial growth. It can force you into debt, derail your savings goals, or cause you to sell investments at the worst possible time. With the right coverage, you stay on track. You can weather storms. You can keep moving forward. So if you've ever thought of insurance as something boring, complicated, or unnecessary, it's time to reframe that thinking. Insurance is a cornerstone of resilience. It's one of the most strategic financial moves you can make, not because you plan to fail, but because you plan to recover if you ever do. As we move into the next chapters, you'll discover what kinds of insurance are truly essential, which ones might be worth considering depending on your life stage, and which ones are more hype than help. But it all begins here with understanding risk. Because once you understand what's truly at stake, every decision that follows becomes clearer. What's often misunderstood about risk is that it doesn't always come with loud warnings or dramatic events. In fact, some of the most damaging risks are the quiet ones, the slow leaks rather than the sudden storms. Think about the gradual erosion of wealth due to prolonged illness or the slow financial strain of caring for an aging parent without support. These aren't cinematic disasters, but they are real common, and often financially devastating. Insurance steps in not just to rescue you from catastrophe, but to provide a stabilizing force against these quieter, creeping threats. The brilliance of insurance lies in its ability to give your financial plan room to breathe. Without insurance, any loss, no matter how small, can start a chain reaction. An uninsured car repair leads to credit card debt, which increases monthly expenses, which pushes back savings, which delays retirement. This is how risk compounds. But with the right insurance in place, you create space in your life space to handle life's curveballs without sacrificing your progress. And here's another truth that's easy to overlook. Insurance isn't just for individuals. It also plays a massive role in supporting businesses, families, and entire economies. Entrepreneurs buy insurance not because they're pessimists, but because they're realists. A single lawsuit or natural disaster could destroy a business overnight. Families purchase life insurance not because they're thinking about dying, but because they're thinking about how to protect their loved ones if the unthinkable occurs. Insurance allows you to act from a place of foresight, not fear. When you shift your mindset from, "I hope nothing happens," to, "I'm prepared for what might something powerful occurs," you stop bracing for impact and start building from strength. You begin making financial decisions with a calm, strategic head instead of an anxious, reactive heart. And in that clarity, you'll find the confidence to pursue goals that once felt risky, like starting a business, buying a home, or investing in your education. Risk will always exist, but fear doesn't have to. It's also worth recognizing that insurance is one of the few financial products that directly reflects your values. What you choose to insure says something about what you care about most. If you insure your income through disability coverage, you're protecting your ability to provide and grow. If you insure your life to protect your family, you're anchoring your legacy in love. Insurance isn't just numbers and contracts. It's a reflection of what matters most, backed by preparation and intention. Of course, insurance isn't perfect. Not all policies are equal. Some are overpriced, others overly complex, and a few are simply unnecessary. But when chosen with clarity and purpose, insurance is one of the strongest tools in your financial toolbox. It doesn't remove risk, but it reshapes it, converting chaos into cost and uncertainty into strategy. So as we close this foundational chapter, remember this: risk is a fact of life. But financial ruin doesn't have to be. Insurance exists to build a bridge between the unpredictable and the prepared. It's not a burden, it's an investment in your peace of mind, your stability, and your future. And in the chapters to come, we'll take this foundation and build on it, unpacking exactly what kind of coverage you need, how to avoid common traps, and how to use insurance as a tool not just for protection, but for empowerment. Chapter 2. Must-have coverage. What you truly need. When it comes to insurance, one of the biggest challenges is separating the essentials from the extras, the coverage that protects your future from the policies that only pad someone else's profits. Insurance at its best is like a safety net. It catches you before a fall becomes fatal. But not all safety nets are created equal, and not all are necessary. To build a secure financial life, you have to know which forms of insurance are worth every penny and why they matter. Let's start with the cornerstone of modern life: health insurance. Medical costs are one of the leading causes of financial hardship worldwide. A single hospital stay, surgery, or chronic condition can wipe out years of savings in just a few months. Health insurance isn't just about getting access to care, it's about shielding your finances from unpredictability. Whether you're covered through an employer, a government plan, or a marketplace, the goal is the same: prevent a medical emergency from turning into a money crisis. Even a basic plan that limits catastrophic expenses is often far better than having no coverage at all. But health is just one part of the equation. If you own a car, auto insurance is typically required by law, and for good reason. Vehicles are not just expensive, they're also potentially dangerous. Accidents happen even to the most careful drivers. Without insurance, you're exposed not only to the cost of repairs or replacement, but to the legal and financial fallout if someone else is injured. Liability coverage protects you from being personally sued for damages. Collision and comprehensive coverage protect the value of your own vehicle. The right combination depends on your situation, but some form of auto insurance is not optional. It's a fundamental shield. Now let's talk about where you live. If you own a home, homeowner's insurance is another essential. For most people, their house is their largest asset. A fire, flood, or natural disaster could destroy that asset in an instant. Homeowner's insurance isn't just about the building, it's about protecting the equity you've worked so hard to build, and the life you've created within those walls. If you're renting, you might think you're off the hook. But renter's insurance is one of the most overlooked and affordable forms of protection. It covers your belongings, furniture, electronics, clothes, and even provides liability coverage if someone gets injured in your unit. For a few dollars a month, it can save you thousands when disaster strikes. And then there's life insurance, a deeply personal but incredibly powerful tool. Not everyone needs life insurance, but if anyone depends on your income, children, a partner, aging parents, then the responsible thing to do is ensure they'd be protected if you weren't around. Life insurance isn't about fearing death. It's about loving the people who rely on you enough to plan ahead. For most people, term life insurance is the best option. It's straightforward, affordable, and does exactly what it promises, provides a payout if you die within a set period. Whole life and other permanent policies have their place, but for most families, simplicity and cost-effectiveness make term the smart choice. You might notice a pattern here. The must-have coverage types all protect you from major losses you couldn't easily recover from on your own. They're not designed to cover minor inconveniences. They exist to catch you when the stakes are life-altering. A broken phone doesn't require insurance. A $300,000 hospital bill might. Still, even within these essential categories, not all policies are created equal. For example, some health plans come with premiums that eat into your paycheck, yet offer little real protection when you need care. Others have high deductibles that discourage people from seeking treatment. The goal isn't to get the most expensive plan. It's to get the most appropriate plan. That means understanding your needs, your risks, and your budget, and then finding coverage that fits without gaps or excesses. It also means being willing to ask questions. Far too many people treat insurance like a mystery they're not qualified to understand. But here's the truth. If someone can't explain your policy in plain English, they either don't understand it or they don't want you to. Don't be afraid to demand clarity. Ask what's covered, what isn't, what the limits are, and how claims work. If a policy sounds too good to be true, or if it's loaded with jargon and exceptions, pause. Good coverage doesn't have to be confusing. There's also a timing factor to consider. The best time to get insurance is before you need it. Waiting until you get sick to buy health coverage or until your car breaks down to add comprehensive protection is like trying to install a fire alarm after the fire's already started. Insurance works best as a preventive tool, not a reactive one. That's why building it into your financial foundation early, especially when you're young and healthy, can save you a great deal of money and stress later. Let's take a moment to think about the bigger picture. Why do these types of insurance matter so much? Because they free you up to focus on what's important. When you're insured properly, you can take a job you love without worrying about the medical plan. You can rent a place you adore without obsessing over break-ins or fire. You can drive to work each day knowing that an accident won't bankrupt you. Insurance creates emotional and financial bandwidth. It gives you the freedom to live fully without constantly looking over your shoulder. But even more than that, the right insurance is a form of respect for yourself, for your future, and for those who count on you. It says, I care enough to protect what I've built. I'm not gambling with my progress. That mindset is the cornerstone of personal leadership. And in a world full of uncertainty, leadership starts with taking responsibility for what you can control. To recap, the must-have coverage typically includes health, auto, homeowners, or renters, and life insurance, if others depend on your income. These aren't luxuries. They're non-negotiables in a solid financial life. Without them, you're walking a tightrope without a net. With them, you're walking forward with stability, clarity, and confidence. So before you chase the newest investment trend or optimize your credit card rewards, pause and ask, is my financial foundation protected? If life threw me a curveball tomorrow, would I be covered? If the answer is no, or even I'm not sure, then it's time to take a closer look. Because true wealth doesn't just come from growing your money. It comes from protecting what you already have. And with the right coverage in place, you're not just surviving uncertainty, you're thriving through it. Yet having the right insurance isn't just about picking the right categories. It's about reviewing and updating them as your life evolves. Insurance is not a one-time decision. What you truly need today might shift dramatically 5 or 10 years from now. That's why one of the most overlooked habits of financially strong individuals is conducting a periodic insurance checkup. Just as you would review your financial goals, investments, or budget, your coverage should grow, with you not lag behind or outpace your reality. For example, let's say you're single with no children and renting an apartment. A solid health plan, auto insurance if you drive, and renter's insurance may be more than sufficient. But if you get married, have a child, or purchase a home, your risk profile changes, and so do your responsibilities. Suddenly, life insurance becomes relevant. Homeowners coverage becomes a must. The consequences of being underinsured grow steeper because more people now depend on your financial decisions. Coverage that felt optional before can quickly become essential. At the same time, people often overinsure in areas that don't actually justify it. They buy extended warranties on electronics, purchase expensive dental plans that cost more than the work they need, or keep old life insurance policies that no longer reflect their financial picture. This is where intentionality matters. Your dollars should work as hard as you do. Every premium you pay should buy you real protection, not just peace of mind rooted in fear or marketing pressure. The key isn't to fear risk, it's to measure it, manage it, and cover it where the damage would be hardest to recover from. And let's not forget the emotional side of coverage. Insurance isn't exciting. It doesn't give you immediate gratification. There's no applause for paying your premiums on time or for making a responsible choice that might never visibly pay off. But this is where true financial maturity reveals itself. It's not about flashy wins, it's about protecting the ground you've already gained. It's about preventing setbacks so big they derail your goals for years. That's the quiet strength of insurance. It won't make headlines, but it makes resilience possible. In the end, must-have insurance isn't just a checklist, it's a reflection of your values. It's about choosing to lead your life from a place of responsibility rather than reactivity. It's about building a foundation so stable that when you pursue bigger dreams, starting a business, traveling the world, investing in your future, you're not building on sand. You're building on rock. And in a world where the unexpected is guaranteed, that kind of strength isn't just smart. It's essential. Chapter 3. Optional coverage. What might be useful? Depending on your life. Once you've covered the essentials: health, life, auto, home, and disability insurance, it's easy to feel like you've checked all the boxes. And for many people, those core policies do provide the bulk of the safety net they need. But life isn't static, and neither is risk. Our goals, careers, family dynamics, and even our location can introduce new kinds of exposure, some subtle, others significant. This is where optional insurance coverage enters the picture. Not mandatory, not for everyone, but potentially game-changing for some. Optional coverage lives in that middle ground between overkill and oversight. It's easy to dismiss until the moment you wish you had it. And yet the very word optional can be misleading. It sounds like a luxury, something you tack on if you've got extra cash or want added convenience. But the truth is, for the right person in the right situation, optional insurance can be the difference between discomfort and disaster. Let's start with an example. Renter's insurance. It's often dismissed by younger adults as unnecessary. After all, if you don't own the building, why bother insuring it? But renter's insurance doesn't protect the landlord's structure. It protects your belongings, your temporary housing if something goes wrong, and even legal liability if someone is injured in your space. For a few dollars a month, it can replace everything you own after a fire or flood. And yet many skip it, not because they can't afford it, but because they don't understand it. Optional. Technically, yes, but for anyone renting, it's not just useful, it's smart. Or consider long-term care insurance. Most people under 50 never think about it. But the reality is that 70% of people over age 65 will need some form of long-term care. And it's not just about aging, it's about accidents, chronic conditions, and the kind of care health insurance doesn't cover. Long-term care policies can help pay for home health aides, assisted living or nursing care expenses that could easily drain a lifetime of savings. If you wait until you need it, it's too late. The best time to explore this coverage is when you're healthy and middle-aged, not when you're already facing decline. There's also pet insurance, increasingly popular among younger families and millennials who see their animals as part of the family. Veterinary care has become incredibly advanced and expensive. Pet insurance won't make sense for everyone, but if you have a high-maintenance breed or limited savings for emergencies, it might save you from heartbreaking decisions when facing a medical crisis. Identity theft. Protection is another form of optional insurance that has grown in relevance. As our lives move more online, banking, investing, shopping, even healthcare, our exposure to cyber risk rises. Identity theft coverage can help recover lost funds, fix damaged credit, and pay for legal help or documentation. If your income relies heavily on digital access, or your credit score is essential to your financial plans, this kind of backup can provide valuable peace of mind. And for those who freelance or operate small businesses from home, professional liability insurance or business owners' policies become relevant. You may think of insurance for corporations or retail spaces, but even solopreneurs can be sued. A wedding photographer can be taken to court over missed shots. A freelance consultant could be blamed for financial losses. Optional insurance in this context becomes a professional shield, protecting not just your business, but your personal finances. Optional doesn't mean irrelevant. It means context-dependent. That's why this kind of coverage requires more than just a quote. It requires reflection. You need to understand your lifestyle, your obligations, your goals, and your vulnerabilities. Are you the sole breadwinner? Do you travel frequently? Do you own valuables not covered by basic homeowners insurance? Do you rely on technology or intellectual property? These are questions that can reveal blind spots in your financial armor. But here's the caution. The world of optional insurance is also where overinsurance traps lurk. This is where aggressive sales tactics, emotional appeals, and fear-based marketing often creep in. There's a fine line between preparation and paranoia. Buying every possible policy doesn't make you responsible. It can make you inefficient, even wasteful. Your goal isn't to avoid all risk. It's to manage the risk that could derail your long-term progress. That's why it's essential to apply a decision filter. Ask yourself, would this risk set me back significantly financially or emotionally if it happened? Is the premium reasonable for the potential coverage? Can I self-insure this risk? Meaning, could I cover the cost out of pocket without major damage to my goals? And finally, is this policy transparent, fair, and built around actual need, not just what's trendy or fear-driven? Let's take another example: travel insurance. Some people never leave home without it. Others skip it completely. Who's right? It depends. If you're traveling internationally, especially to a country with high medical costs or less infrastructure, travel insurance could save you thousands or even your life. If your trip is a short domestic flight with minimal expenses and flexible cancellation, it might be unnecessary. Same product, different application. Optional coverage is also often tied to life phases. What's unnecessary at age 25 might be essential at 45. A young adult with no dependents might not need life insurance. But once kids enter the picture, the math changes. A single renter might not need extra personal property protection, but a married couple with heirlooms or high-end electronics might. The key is to revisit your needs at key life milestones: graduation, marriage, parenthood, home ownership, career changes, and retirement. And if there's one piece of advice that threads through all of this, it's this: don't make assumptions. Don't assume you don't need something just because your friends don't have it. Don't assume you do just because an agent says you should. Take time to research. Compare policies. Ask questions. And when you don't know, work with a trusted fee-only advisor, not a commission-based seller who puts your needs above their paycheck. Insurance, optional or not, should never be bought in a panic. It should be chosen like a tool specific to the job, designed for a purpose and reviewed regularly. Optional insurance, when chosen well, adds precision to your financial plan. It fills in the cracks between your needs and your goals. It doesn't try to control life, it simply allows you to meet it with more confidence. So as you look at your current insurance setup, don't just ask, "Do I have enough?" Ask, "Does this reflect who I am today and who I'm becoming?" That's the true power of thoughtful insurance planning. It aligns your protection with your purpose, not just your possessions. As we explore the landscape of optional insurance, one powerful truth emerges. It's not about having more coverage, it's about having the right coverage for the life you're actually living. And sometimes that life isn't clearly reflected in a form or a quote, it's in the quiet details of your daily reality. Think about someone who works remotely and spends most of their time on the road, moving between Airbnbs and co-working spaces. That person doesn't fit into the neat categories of homeowner or renter. Their risk profile is different, more mobile, more digital, more fluid. For them, a strong portable renter's or personal property policy, combined with identity protection and travel insurance, might be far more valuable than an unused auto insurance policy on a car they no longer own. Or take the example of a young couple starting a family. Their concerns evolve almost overnight. Suddenly, things like accidental death insurance, hospital indemnity plans, or even critical illness riders begin to take on real weight. These policies might seem excessive in earlier phases of life, but once you factor in the emotional and financial responsibility of caring for someone else, they can offer peace of mind that's hard to quantify. In many cases, optional insurance also reflects the values you carry. Someone passionate about sustainability might want green home coverage that pays for eco-friendly rebuilding after a disaster. An art collector may choose valuable items insurance to protect irreplaceable pieces. A pet lover may never bat an eye at pet premiums because that animal isn't just a pet, it's family. And yet there's a deeper message here. Choosing the right optional insurance isn't just about protecting your stuff, it's about protecting your story, your ability to keep living, creating, moving forward. That's why reviewing your insurance annually or at every life transition is more than a to-do item. It's a financial check-in with your evolving identity. Optional insurance, when thoughtfully considered, becomes a form of self-leadership. You're not just reacting to fear or following a trend, you're making proactive choices based on who you are, what matters most, and what risks would truly disrupt your path. In the end, the value of optional coverage is measured not in what it costs, but in what it protects you from losing, and when aligned with your life, your values, and your goals. That protection is not optional at all, it's essential. Chapter 4. What you probably don't need: cutting through the hype. In a world driven by fear-based marketing and glossy pitches, it's easy to believe that the more insurance you have, the safer you'll be. But here's the truth. Most companies won't tell you not all insurance is good insurance. In fact, some policies are more about profit for the provider than protection for you. Just because something is sold as peace of mind doesn't mean it adds real financial value to your life. That's why this chapter is about empowerment, cutting through the hype, and reclaiming clarity. Because protecting your money also means knowing what not to spend it on. Let's start with a hard reality. Many of the insurance products aggressively marketed today target your emotions, not your actual risks. Extended warranties on electronics, credit card payment protection plans, or flight insurance for domestic trips often fall into this category. The language sounds comforting. The price looks small, but when you step back and look at the numbers, the math rarely works in your favor. These policies often come with so many exclusions, limitations, or fine print that you'd be better off simply saving that money in an emergency fund. Take extended warranties as an example. You buy a new laptop, and at the checkout you're offered an extended warranty for $119. It sounds wise until you realize that the manufacturer already offers a 1-year warranty, and the device is statistically unlikely to fail during the second year. Plus, in many cases, the warranty doesn't cover accidental damage, which is what most people actually worry about. In that light, the $120 isn't insurance, it's a donation to the store's bottom line. Or consider identity theft protection services. While identity theft is real and concerning, the truth is that you can often get better protection through basic credit monitoring, a freeze on your credit report, or tools already included in your banking services. Yet many companies charge monthly fees for services that don't provide significantly more security than free or low-cost options. Then there's the seductive world of insurance bundles and upsells. Insurance agents may offer add-on coverage that sounds responsible: roadside assistance, rental car reimbursement, trip cancellation, gadget insurance. But it's essential to ask, would this be catastrophic if I didn't have it covered? If the answer is no, then it may not belong in your budget. This doesn't mean all small policies are scams, but it does mean you need to be strategic, not reactive. Insurance should protect you from financial ruin, not from every inconvenience. Another common trap is overlapping coverage. Many people don't realize they're paying for the same protection in multiple places. You might already have travel coverage through your credit card. You could be paying for health-related benefits through your employer, and again through a supplemental policy you forgot you signed up for years ago. Or you might buy rental car insurance, even though your auto policy already covers it. The result, you're not safer. You're just overspending. What's more, some insurance is sold for things that are better handled with savings. For example, appliance protection plans or cell phone insurance are often more expensive over time than simply setting aside a small repair and replace fund. If the item is affordable enough to replace with money from your emergency fund or monthly budget, you probably don't need to insure it. And then there's fear-driven marketing, perhaps the most manipulative force in the industry. Companies know how to play on anxiety. What if you get sick on vacation? What if your dog bites someone? What if your wedding gets rained out? These are valid concerns, but rarely do they rise to the level of financial devastation. Insurance should be for risks you can't easily absorb, not just for situations that make you uncomfortable. One of the smartest habits you can develop is what we'll call the replace versus recover test. Ask yourself, if this thing were lost, damaged, or delayed, could I pay to replace it? Or would I be financially set back for years, maybe even derailed from my goals? If it's the former, save instead of insure. If it's the latter, that's where insurance earns its place. Another red flag: insurance that's difficult to understand. If a policy takes 30 pages to explain and still leaves you unsure of what's covered, it's likely not designed for your benefit. Simplicity and transparency matter. You shouldn't need a law degree to know whether a plan is worth it. And we must talk about life insurance because even here, unnecessary complexity can hurt. Many people are sold expensive whole life or variable universal life insurance when what they really need is a simple term policy. While permanent life insurance can make sense in a few specific scenarios, it's often pitched as an investment when it's really a commission-heavy product. If you don't fully understand why you're buying it, or if you haven't maxed out your retirement contributions yet, there's a good chance you're not ready for it. Even pet insurance, though increasingly popular, deserves careful consideration. In some cases, especially with breeds prone to expensive health issues, it makes financial sense. But in others, the premiums, deductibles, and limits don't justify the benefit. A self-funded pet care account might serve you better. So what's the antidote to all this noise? It's not skepticism, it's discernment. It's learning to distinguish between what's truly necessary and what's just cleverly marketed. It's remembering that insurance is there to protect your capacity to move forward in life, not to nickel and dime you into paralysis. Your goal should be protection, not perfection. You don't need to insure against every possibility. you need to protect against the ones that would truly derail your financial life. And when you free yourself from unnecessary coverage, you're not just saving money, you're reclaiming control. You're saying, I trust myself to make clear, calm, confident financial choices. Cutting through the hype isn't just about saving a few bucks. It's about refusing to let fear, confusion, or clever sales tactics dictate how you protect your life. It's about choosing clarity over clutter. And most importantly, it's about keeping your financial energy focused on what really matters. Building a life that's resilient, not reactionary. Because in the end, true security doesn't come from buying more insurance. It comes from knowing why you bought the insurance you have and why you said no to the rest. And here's another layer that's often overlooked: the emotional cost of unnecessary insurance. It's not just about the money you spend. It's also about the mental weight you carry when you're constantly trying to hedge against every minor possibility. The belief that you need to insure everything stems from a desire for absolute certainty, but the truth is, certainty is an illusion. Life will always carry risk, and trying to eliminate every risk can lead to a mindset of fear-driven consumption spending, not because it's wise, but because it eases temporary anxiety. This constant hedging can actually cause you to miss out on bigger opportunities. Money that could be used to invest, build savings, or pay down high-interest debt ends up trickling into low-impact policies that give the illusion of safety without providing real financial return. In that way, excessive insurance can become a quiet form of lifestyle inflation, the kind that doesn't show up as luxury purchases, but as bloated monthly bills for things you likely won't need and wouldn't benefit from even if you did. It's also important to recognize that the insurance industry, like any industry, is built on profit. That doesn't make it unethical. It just means you must approach it with clear eyes. Insurance companies rely on actuarial science, which means they understand risk better than the average consumer. The odds are stacked in their favor. For every policy they sell, they expect to pay out far less than they collect in premiums. So unless you have a compelling reason and context for a specific policy, you may be better off being your own insurer, through savings, smart planning, and risk avoidance. And when in doubt, ask yourself, who is truly benefiting from this policy? If the answer leans more toward the company than toward your long-term stability, that's a sign to pause and reassess. You don't need to reject insurance altogether. You just need to refine your relationship with it. Instead of thinking of it as a product you passively accept, begin to see it as a financial instrument you actively evaluate. Another trap many fall into is relying on peace of mind as the only justification. That phrase gets used a lot in marketing, and for good reason. It sells. But peace of mind that comes at the cost of real financial strain is false comfort. True peace of mind comes from understanding your needs, knowing your coverage is aligned with those needs, and feeling confident that your money is working efficiently, not just obediently. This is especially important for younger adults or those building their first financial foundation. The pressure to insure everything can derail momentum. People get discouraged by how much adulting seems to cost. But once you start saying no to what doesn't serve you, you'll find breathing room in your finances. You'll begin to realize that strength doesn't come from having every box checked. It comes from knowing which boxes don't need checking in the first place. Ultimately, what you don't need is just as important as what you do. Every dollar has power. Every financial decision reflects a belief about your future. So let your choices reflect courage, not caution. Let your insurance serve your goals, not your fears. Because when you cut through the hype, you give yourself the gift of clarity. And that clarity becomes the foundation of smarter, calmer, more confident financial leadership. Chapter 5. How to Shop Smart. Getting the right coverage for the right price. One of the most empowering realizations in personal finance is that insurance doesn't have to be complicated, intimidating, or expensive if you shop for it with strategy, not stress. Far too often, people feel at the mercy of the industry, signing documents they barely understand, paying premiums they can't fully explain, and crossing their fingers that they did the right thing. But the truth is, insurance is a service like any other, and smart shopping can be the difference between bloated costs and well-optimized protection. Let's begin with the principle that should guide all insurance purchases: pay only for the risk you can't afford to carry yourself. That means if a certain loss would derail your financial life, like a major car accident, a house fire, or an unexpected medical emergency, you want coverage for it. But if a loss would merely be inconvenient rather than catastrophic, you may not need insurance for it, or you may need far less coverage than you think. This mindset immediately puts you in the driver's seat. It transforms you from a passive customer into an informed negotiator. And that's crucial because insurance pricing is not fixed. It varies from company to company and from customer to customer based on risk profiles, underwriting formulas, and even marketing strategy. One insurer might quote you $200 a month. Another might quote $110 for the same protection. Understanding how to compare and evaluate these offerings is where your financial leadership really begins to shine. So how do you actually shop smart? First, you need to get clear on your needs before you start browsing policies. Don't let the insurance agent define the shopping cart for you. Define it yourself. If you're buying health insurance, think about what kind of care you actually use. Do you need frequent doctor visits? Are you mostly healthy and only concerned about major emergencies? For auto insurance, consider your car's value, your driving habits, and how much risk you're comfortable retaining through your deductible. With renters or homeowners insurance, assess your belongings honestly and decide what level of replacement coverage gives you peace of mind without padding your premium unnecessarily. Once you're clear on what you need, gather multiple quotes. But don't just compare the monthly premium. That's where many shoppers go wrong. The cheapest policy is not always the best. You need to understand what you're actually getting: coverage limits, exclusions, deductibles, out-of-pocket maximums, claims processes, and provider reputation. Let's say two health insurance plans both cost $300 a month. One has a $5,000 deductible and covers only emergency care. The other has a $1,500 deductible and includes access to preventive care and mental health services. Depending on your health needs, the slightly higher total cost of the second option might save you money in the long run and provide a far better safety net. The same applies to car insurance. Some policies offer roadside assistance, rental reimbursement, or accident forgiveness at no extra charge. Others may advertise a low premium but charge you steeply for every add-on. Again, the magic lies in reading the details, not just the headline numbers. This is also where working with an independent agent rather than a captive one can help. Independent agents represent multiple companies and can help you compare options without pushing a single brand. But even then, you must lead the conversation. Ask them questions like, can you explain how the deductible affects the premium? What's the claims experience like with this provider? How does this policy compare to others with similar coverage? If they can't answer with clarity or rush you into a decision, move on. Another key to shopping smart is knowing when to shop. Many people set their policy on auto-renew and never revisit it for years. That's a mistake. Premiums can creep up gradually, and your life circumstances may have changed. Make it a habit to review your major insurance policies at least once a year, or anytime you experience a major life shift, a move, a marriage, a new child, a career change, or a significant health update. And speaking of life changes, timing can also impact price. For example, shopping for auto insurance when you've just turned 25 or after improving your credit score can lower your rates. Bundling policies like auto and home with the same provider can also lead to meaningful discounts. But always compare the bundled offer with standalone options to be sure the discount is real and not just dressed-up marketing. Let's also talk about deductibles, because this is where your decision-making muscles really get a workout. Choosing a higher deductible can lower your monthly premiums significantly. But only do this if you have an emergency fund that can comfortably cover the deductible amount. Too many people choose high deductibles thinking it'll save money but then get caught unprepared when they actually need to file a claim. The smartest shoppers also pay attention to the customer service side of insurance, not just the numbers. A cheap policy is worthless if it comes with poor claims processing, confusing communication, or denied coverage when you need it most. Read reviews. Ask around. Find out what happens when people actually file claims. Insurance is a promise, and you want to work with providers who keep theirs. And finally, never underestimate the power of asking for a better deal. Call your current provider and ask if there are any discounts you're not receiving, loyalty discounts, safe driver perks, bundled offers, or lower risk adjustments based on life changes. Sometimes just the act of calling and saying "I'm comparing other quotes" is enough to trigger a better offer. Remember, these companies want to keep your business. Use that to your advantage. At the end of the day, shopping smart for insurance is not about finding the cheapest deal. It's about finding the best value for your life. It's about knowing what you're protecting, how much that protection should cost, and whether the company you're trusting will stand by you when it counts. When you approach insurance with clarity, curiosity, and control, you stop feeling like a confused customer and start acting like a confident investor in your own stability. That's the shift we're aiming for, not just better premiums, but better power over your financial world. Because the smartest shoppers aren't just looking to save money, they're looking to strengthen their future. Smart insurance shopping isn't just a one-time task, it's a habit of financial vigilance. And perhaps one of the most overlooked components of getting the right coverage at the right price is regularly reassessing the value you're receiving. Just because a policy served you well last year doesn't mean it's still the best fit for your life today. Costs shift, terms change, and you evolve too. For example, if your auto insurance includes coverage for a vehicle you no longer own, or if your homeowner's policy is still priced based on outdated rebuilding costs, you might be paying for protection that no longer reflects your reality. That's why reviewing your policies annually isn't a formality, it's an act of self-respect. It says, "I'm not on autopilot. I'm actively managing my money." Another powerful tip for smart shopping is understanding what's negotiable and what's not. While you can't negotiate standard rates for things like health insurance set by the marketplace, you can control the structure of your coverage. You can adjust deductibles, raise or lower coverage limits, or remove unnecessary riders that inflate premiums. In other words, you may not control the base price, but you do control the recipe. That's a crucial distinction. It's also worth noting that bundling your policies, while often marketed as a shortcut to savings, isn't always the better deal. Bundling works best when all parts of the bundle actually serve your needs. Never keep a subpar policy simply because it's bundled with a good one. Instead, evaluate each policy on its own merit. If one piece isn't pulling its weight, shop for a better standalone option. The illusion of savings should never blind you to the actual value received. For many, one of the most empowering steps in the shopping process is understanding your claims history and credit profile, because insurers absolutely do. These two elements play a significant role in the rates you're offered. A clean driving record or history of minimal claims can put you in a preferred category. Meanwhile, a strong credit score often unlocks lower premiums in many states. Knowing this puts you in a stronger negotiating position and gives you added motivation to build healthy financial behaviors that go beyond insurance. Now let's talk briefly about timing. Many people wait until a policy is about to expire, or worse, after an incident has occurred, before shopping. But the best time to compare rates is when you're calm, not rushed. This gives you space to ask questions, understand differences, and make decisions based on logic, not urgency. And if you do decide to switch, don't cancel your old policy until the new one is in place and confirmed. Avoid gaps in coverage at all costs. They not only expose you to risk, but they may also lead to higher future premiums due to what insurers call a lapse. Finally, as you grow more confident in this process, you'll start to notice something remarkable. Shopping for insurance is no longer a chore. It becomes a form of financial stewardship. It's a practice of aligning your protection with your priorities. a way of saying I'm not just buying coverage, I'm investing in my peace of mind. This clarity is what separates the reactive from the intentional. When you take the time to understand your options, ask the right questions, and choose policies that fit your unique life, not someone else's, you begin to step fully into financial leadership. And that more than any discount or perk is the real reward of shopping smart. Chapter 6. Reviewing and updating, keeping your insurance in tune with life. If insurance is meant to protect what matters most, then keeping it aligned with your life isn't just a good idea. It's essential. Insurance is not a set it and forget it part of your financial plan. Like your health, your goals, or your relationships, it needs periodic check-ins, updates, and adjustments. Life evolves, and your coverage should evolve with it. Let's start with a simple truth. Most people don't review their insurance until something goes wrong. A car accident, a health scare, a flooded basement. It's only then, under stress and pressure, that many realize their policies were outdated, underfunded, or mismatched for their current reality. But by that point, it's often too late to change the outcome. That's why proactive insurance maintenance is so powerful. It doesn't just save money, it protects momentum. It turns insurance into a living financial tool, not just a dusty file in your cabinet. So when should you review your insurance? A good rule of thumb is at least once a year, ideally around the same time you do other financial checkups like budgeting, investing, or preparing taxes. But there are also key life events that should trigger an immediate review. These moments signal that something significant has shifted, and that your risk profile has likely shifted too. Think about a major change in your household, getting married, getting divorced, welcoming a child, or losing a loved one. These are not just emotional transitions, they're financial inflection points. Your responsibilities, dependence, and even your goals have changed. That means your life, health, and even estate-related insurance needs may need to be revisited, or consider changes to your employment. A new job might come with different benefits, different income levels, or even gaps in coverage. If you've started a side hustle or become self-employed, you might now need business liability, coverage, disability insurance, or a personal umbrella policy. These aren't just boxes to tick. They're ways to make sure your protection evolves with your income and career path. Then there's housing. Buying a new home, refinancing a mortgage, or renting in a new neighborhood should all prompt a review of your homeowner's or renter's insurance. Coverage levels, deductibles, and endorsements need to reflect the current value and risk factors of where you live, not where you lived 5 years ago. Vehicle changes are another big one. Did you buy a new car? Pay one off, add a teen driver to your policy. Each of these changes comes with new liabilities and potential premiums. Reviewing your auto insurance after these transitions can mean the difference between being fully covered or financially exposed. And let's not forget about health. A new diagnosis, a change in medical needs, or a shift in family coverage can drastically affect the type and level of health insurance that makes sense. Reviewing your options during open enrollment or even off-cycle after a major change can help you avoid costly missteps or missed care. Even small changes add up. Renovating your home, adding security systems or safety upgrades. Your insurer needs to know. These updates can often reduce your premiums or even qualify you for new discounts. And if your property value increases significantly, failing to update your coverage can leave you underinsured if disaster strikes. Now let's be honest, reviewing insurance doesn't sound exciting. But it doesn't have to be overwhelming. Start by keeping your policies in one place, preferably digitally. Set a recurring calendar reminder every year to pull up your coverages. Look for any gaps, overlaps, or outdated information. Then ask yourself, if something happened today, would this policy still protect what matters most to me? If the answer is, I'm not sure, then it's time for a conversation with your insurance agent, your partner, or even just yourself. And here's a mindset shift that makes this easier. Don't treat reviewing insurance as damage control. Treat it as an opportunity for growth. Every time you review and update your policies, you're not just avoiding loss, you're affirming your values. You're saying, I'm paying attention. I'm protecting my priorities. I'm planning for the life I actually have, not the one I used to have. Updating your insurance can also help eliminate wasted spending. If you're still paying for coverage that no longer applies, like roadside assistance on a car you sold, or travel insurance for a lifestyle you no longer lead, you're effectively burning money each month. But more importantly, keeping unnecessary policies creates confusion. It dilutes your clarity. And clarity is one of your greatest financial assets. Another common issue is when people stack coverage without coordination. Maybe you have life insurance through your employer, a separate individual policy, and a credit card that includes accidental death benefits. But do these policies overlap? Are they coordinated to actually serve your family in the event of a crisis? Reviewing and simplifying coverage isn't about doing less. It's about doing what matters most with precision. It's also crucial to talk to your loved ones during this process. Spouses, adult children, or anyone who might be affected by a claim should know what coverage exists, where to find it, and how it works. Insurance is only powerful when it's accessible and understood. A secret policy that no one knows about, or a forgotten beneficiary that hasn't been updated, isn't a plan. It's a potential problem. The act of reviewing your insurance is also an act of modeling leadership. When you stay engaged, make informed updates, and adjust based on life's rhythms, you set a standard for your household, your children, and even your community. You're showing what financial stewardship looks like in real time. Because life will keep changing. That's a given. Your coverage should too. So as you move forward, let this chapter serve as a checkpoint not just for your policies, but for your posture. Are you reactive, waiting for life to shake you into action? Or are you proactive, leading your finances with intention, clarity, and care? Reviewing your insurance is not about expecting the worst. It's about building resilience. It's about having a system that flexes with you, protects what matters, and gives you the peace of mind to live fully. Because when your coverage reflects your life, not just your past, you're not just insured. You're empowered. It's also worth remembering that reviewing your insurance isn't only about you, it's about the people who depend on you too. Many individuals think of insurance purely as a private safety net, but in truth, it's a promise to others. Your life insurance isn't just for you, it's for your spouse, your children, or anyone who would bear the emotional and financial burden if you were no longer here. Your health insurance isn't just for you. It's what ensures you can keep showing up, healthy, productive, and present for those who rely on you. So when you review your coverage, don't just ask, is this still the best deal? Ask, does this reflect the life I'm living today and the people I'm protecting? This review process is also a chance to refine your goals. Maybe a few years ago you were laser-focused on protecting your income, but now as your net worth grows or your debt decreases, your priorities shift. Perhaps now it's more about protecting legacy, preserving assets, or optimizing your coverage so it works in harmony with your retirement or estate plan. Good insurance isn't static, it should adapt with your financial maturity. And as you grow financially, you may find that complexity creeps in. More policies, more documents, more providers. If that's the case, don't be afraid to simplify. Consider consolidating where appropriate, bundling policies, working with a single trusted advisor. Complexity is not a badge of honor, it's a source of confusion. Simplicity, when aligned with your needs, is a form of power. Let's not forget the emotional dimension either. Insurance touches some of the most sensitive areas of life: loss, illness, accidents, mortality. That's why so many people avoid reviewing it. It's not just the paperwork, it's what the paperwork represents. But avoidance doesn't prevent the unknown. It only robs you of peace in the present. On the other hand, clarity, even in the face of discomfort, is empowering. Every time you review and update your insurance, you're refusing to live in denial. You're choosing maturity, ownership, care. And that care ripples outward. Children who grow up watching parents handle their finances with thoughtfulness and consistency are more likely to adopt those habits themselves. Partners who review policies together tend to build stronger trust and unity. Communities where people are covered appropriately are communities that weather storms better, literally and figuratively. So in the end, reviewing and updating your insurance isn't just about protection. It's about alignment. It's about bringing your financial systems back in sync with your real life. It's about ensuring that when life inevitably changes, your plan doesn't fall behind. That's not just smart finance, that's self-leadership. And when you live that way, not just hoping for the best but preparing with clarity, you're not just insured. You're intentional. You're free. At the end of the day, insurance isn't about fear. It's not about worst-case scenarios playing on repeat in your mind. It's not about being sold into a panic or pressured into policies you don't need. Good insurance is about peace that comes from knowing you've made wise decisions, not perfect ones. Peace that lets you sleep well at night because you've taken the time to cover what truly matters. Throughout this audiobook, we've walked through the real purpose of insurance, not as a product but as a strategy, a tool, a financial shield that protects you from events that could otherwise derail everything you've worked so hard to build. But we've also seen the other side, the noise, the hype, the upselling, the fear-based marketing. It's easy to get caught in that. It's easy to feel like you need more just in case. But here's the truth. More coverage doesn't always mean more security. Sometimes it just means more clutter. The goal isn't to insure everything. The goal is to insure wisely, thoughtfully, based on your life, your risks, your goals, not someone else's commission or society's definition of responsible. Empowerment starts with awareness, and awareness leads to intentionality. The fact that you've made it to this point in the audiobook means you're already ahead of the curve. You're not waiting for someone else to make decisions for you. You're stepping into leadership over your own financial future. That's powerful. That's rare. So go forward with clarity. Protect what would be devastating to lose. Decline what doesn't serve you. Review regularly. Update intentionally. And remember, insurance is not the destination. It's just one vehicle on the road to a more resilient, confident life. When you cover what matters and ignore the noise, you give yourself the gift of focus. You reclaim your peace of mind. And more importantly, you make space for your money to do what it was meant to do. Build a life of meaning, not fear.